Okay, so now in this class, we are going to attempt the March-June 2025 paper. As we have studied all the past papers in the last folder, we cover all the past papers. So this is now March-June 2025. This scenario relates to 5 requirements. Let's see the scenario. It is 1st July. Okay. And you are an audit supervisor at Cornada and Company. So Cornada and Company becomes the audit firm. Planning the audit of Pimento Company for the year ending 31st August. Company is a retailer of food and household items with a large network of stores across the country. Forecast profit before tax is 18.8 million. Audit manager held a planning meeting with the finance director and has provided you with the following notes. So it is 1st July. You are audit supervisor at Cornado Company. So Cornado Company is the audit firm. You're planning the audit of Pimento Company, which is the client. It's a retailer of food, household items, large network of stores across the country. Profit before tax is 18.8 million. Audit manager held a planning meeting and has provided you with the following notes. Pimento's internal audit department conducts an extensive program of control testing across the network of stores. Internal audit aims to visit every store over a 24-month period. Audit manager has obtained permission from the finance director for the external audit team to rely on the controls testing undertaken by internal audit. So internal auditor aims to visit every store over 24 months. Audit manager has taken permission from the finance director for the external audit team to rely on controls testing undertaken by internal auditor. They are relying on controls testing of internal auditor. In May 2005, a fraud was discovered in the finance department. Following an investigation, finance clerk at Pimento was found to be responsible and was dismissed. As a result, remaining members of the finance department have been allocated additional tasks until a replacement clerk is found. This has led to backlog in the processing of accounting records. So fraud was discovered, finance clerk was involved, and many members of the finance department have been given additional tasks because the clerk is not there. His tasks have been given to others, and this has led to a backlog. During the meeting, the finance director provided some forecast information which indicates that operating profit margin is predicted to increase from 12% from 2004 to 17% for 2005. Audit file for previous year's audit note includes an adjustment which was required to operating expenses resulting from incorrect cutoff of selling costs. Audit file from previous year's audit includes details of an adjustment which was required to operating expenses resulting from incorrect cutoff. So there was some incorrect cutoff, wrong accounting treatment, accounting period recording of cutoff. In December, Pimento began making online sales directly to the general public via company's website. Online transactions should be automatically recorded in company's accounting system via direct link with the website. During the first few months, however, there were some technical issues, meaning that website sales were not automatically recorded in the accounting system. So you begin online sales. Online sales should have been automatically recorded in accounting system. But first few months, there were some technical issues, means website sales were not recorded in the accounting system. Pimento values inventory in line with industry practice, which is to use selling price less average profit margin, which the directors consider to be a close approximation to cost. Company receives trade discount from its main supplier, which was linked to the total amount purchased during the year. In accordance with supplier contract, the amount is reclaimed after the year end based on actual volumes purchased over the year. So company receives trade discount from its main supplier, which is linked to total purchase during the year in accordance with supplier contract. The amount is reclaimed after year end based on actual volume purchase. Now, the thing is that it is a trade discount, which is linked to total purchase during the year. Okay. And the amount is reclaimed after the year end. So discount is given, but not now. Amount is reclaimed after the year end. Okay. Pimento is expecting to include a receivable in relation to this trade discount of 980,000 at the year end, along with corresponding entry in the cost of sales, which relates to goods which will have been purchased by the year end. So you will be reclaiming the discount. So Pimento is expecting to include a receivable in relation to trade discount. They have to receive trade discount from supplier after their rent. So it is planning to include it in receivable. During their surplus fixtures and fittings were sold, resulting in loss on disposal of 450. Additionally, facilities in each of the company's distribution depots were upgraded at a cost of 620,000. So fixtures, fittings were sold and facilities were upgraded at 620,000. Pimento has not paid its shareholders dividend this year, choosing instead to undertake a bonus issue of shares in April. Okay. I will read it slowly when I will be checking the scenario. However, first explain the responsibilities of Conrad and Company. Who is Conrad and Company? The audit firm. Under ISA 240, auditor responsibility in relation to fraud of an audit of financial statements. Okay, so responsibilities of auditor in relation to fraud. Okay, this has been a requirement which has been done in classes, and this has been discussed multiple times, and this is also present in the notes. Okay, like if I refer you to the notes file, It's a straight answer in the topic of fraud and error, right? Here, it is responsibilities of management in relation to fraud and responsibility of auditor in relation to fraud. See, it's a complete answer that has been discussed with you. Responsibilities of management in relation to fraud and responsibilities of auditor in relation to fraud. Obviously, it's asking for responsibilities of auditor in relation to fraud. So 4 marks, I have to write auditor responsibilities. This is a very huge statement. I will obviously summarize it, okay? But just to let you know, this has been studied in the classes, okay? I will write the answer for it. So first we write the ultimate responsibility for preventing and detecting any fraud lies with management and those charged with governance. It is important that management develop culture and environment that reduces chances of fraud. Auditor is only responsible to obtain reasonable assurance financial statements are free from material misstatements, whether due to fraud or error. The auditor must remain alert throughout the audit for any risk of fraud. In addition, the auditor must respond appropriately to any fraud or suspected fraud. Okay, so these are the 4 points you need to write. Actually, this is a summarized version of this. Okay, if you want, this is on the screen. This is in your notes. I would suggest you to read this as well, and I hope you have learned this as well. But obviously, people might be thinking that for 4 marks, this is too long. I agree. So for summarized version, write 4 things. Ultimate responsibility lies on management, those charged with governance. It is important they develop a culture that reduces chances of fraud. Auditor is only responsible to obtain reasonable assurance that FS are free from misstatements due to fraud. Auditor must remain alert throughout the audit for any risk of fraud, and he must respond appropriately to any fraud. Okay, please note this, then I will move forward. Okay, describe 8 auditors' response to each risk. So normal requirement comes every time, 8 auditors' responses. I've told you always read the scenario. First write the easy ones, then move towards the difficult ones. Let's start. It is 1st July, you are audit supervisor of Coronado. So this is the audit firm. You're planning the audit of Pimento for the year ending 31st August 2005. Company is a retailer of food and household items with large network of stores across the country. Profit is 18.8. Audit manager is planning a meeting with the finance director and it's provided with the following notes. Internal Audit Department conducts extensive program of controls testing across a network of stores. Internal Auditor aims to visit every store over a 24-month period. Audit Manager has obtained permission from the Finance Director to rely on the controls by Internal Audit. In May 2005, a fraud was discovered in Finance Department. Finance clerk was found to be responsible, was dismissed. Other members have more work. This has led to backlog. During meeting, Finance Director provided forecast information which indicates operating profit margin will increase from 12% to 17%. Audit file for the previous year's audit includes details of adjustment which is required to operating expenses resulting from incorrect cutoff of selling costs. In December, Pimento began making online sales directly to general public via website. Online transactions should be automatically recorded in accounting system, but there were some technical issues. Website sales were not recorded. Pimento values inventory in line with industry practices, which is to use selling price less profit margin, which directors consider to be a close approximation of cost. Company receives a trade discount from supplier, but this is reclaimed later, so company is planning to include a receivable of 980,000 along with this. During their surplus assets were sold, resulting in loss on disposal. Additionally, facilities of each of company's distribution depots were upgraded for 620,000. Does not pay shareholders dividend, choosing instead to undertake a bonus issue. Okay. So I think that it's 8 auditors' responses. Some risks are easy, some are maybe requiring more effort. So let's start. Okay, I can see that there are few risks, very straightforward, and few I have to work around. And always it happens like this that you can get maximum marks if you just follow my strategy of getting the easier ones first. Okay. During the year, okay. Very easy risk during their surplus fixtures and fittings were sold, resulting in loss on disposal of 50. Remember, when you sell assets, there is a risk that these fixtures and fittings have not been removed from assets. Hence, assets may be overstated. In addition, the loss on disposal may have been incorrectly calculated. Okay, and remember response, review financial statements to ensure that disposed items are removed from assets. In addition, recalculate the gain, or here it is loss on disposal. Remember, very easy point. Second, the company upgraded its depots at a cost of $620,000. The upgradation cost, renovation costs. Remember, there is a risk that this expenditure is incorrectly classified between capital revenue, hence assets expenses may be misstated. Capital expenditure should be included in assets and revenue expense to P&L. So, company has upgraded depots at a cost of 620,000, right? So, when you have upgraded the depots, spend 620,000. So, there is a risk that you misclassified between capital revenue. Hence, if you have misclassified the capital revenue, then assets or expenses may be misstated. Okay. Response, remember, obtain breakdown of invoices to assess nature of expenditure. If capital, ensure it is capitalized, and if revenue, ensure it is expensed to profit and loss statement. Two easy points. I got 4 marks. Another easy point has come up multiple times, these 2 points and this one as well. Inventory is valued at selling price less profit margin. There is a risk that inventory is not properly valued as per IS2, lower of cost or NRV. Hence, inventory may be misstated. Response. Or I've written you detailed cost and NRV testing should be done. To ensure inventory is valued as per IS2. Okay, 6 marks are in front of you. Please note, then I will continue. Okay, so as you know, audit risk is any risk which affects financial statements that due to that financial statement we misstated. So fixtures fitting were sold, risk that they were not removed and assets may be misstated. Loss may not have been properly recorded. So review financial statements to ensure disposed items are removed, recalculate the loss on disposal. Similarly, company undertake development, upgradation expenditures, so risk that this is incorrectly classified between capital revenue. So assets and expense may be misstated and obtain breakdown of expenditure to ensure nature of expenditure, if capital, ensure capitalized, if revenue, ensure expense. Inventory is valued at selling prices, profit margin, risk that it's not property valued as per IS2, hence inventory may be misstated. And detailed cost and RV testing needs to be done to ensure inventory is valued as per IS2. So any financial statement issue, it's audit risk. Okay. Further, the company undertook a bonus issue of shares in April 2005. Now, this is a very common point. Company took out a loan. There is a risk that it was not properly recorded. Hence, non-current liabilities and current liabilities may be misstated. The split was incorrect. Company made a share issue. So risk that it was incorrectly split between capital and premium. So equity was misstated. Company undertook a bonus issue. There is a risk that this bonus issue is not correctly accounted for in financial statements. Hence, equity may be misstated. Response: review financial statements to ensure bonus issue is recorded in accordance with the relevant accounting standards and all disclosures are made as per relevant standards. You know, whether company makes loan issue, takes out a loan, share issue, bonus issue, there is always a risk. When taking out a loan, risk that it's incorrectly split between current non-current liabilities, so liabilities may be misstated, and response, review financial statements to ensure split is correct. Okay, disclosures are correct. Share issue, there is a risk that it's incorrect split between capital and premium. Okay, review financial statements to ensure split is correct. Bonus issue, a risk that it's not correctly accounted in financial statements. Okay, you know, for bonus issue, you need to increase the number of shares. So there is a risk that it's not correctly accounted. So equity is misstated. Response, review financial statement to ensure it's recorded in accordance with relevant standards. Okay. Company is expecting to include receivable in relation to trade discount of $980,000. You saw this point, that company receives a trade discount from supplier which is linked to total amount of purchased. In accordance with supplier contract, amount is reclaimed after year end. Company receives trade discount, but supplier says you must receive it after year end. So what is company doing? Company wants to claim some discount after year end. So when company plans to receive discount after year end, claim discount after year end, they are planning to include a receivable against the discount of 980,000. Okay. What is the risk here? You want to claim some discount after year end of 980,000, so you're planning to include receivable in trade discount. There is a risk supplier may not agree to repay this claim. Hence, receivables may be overstated. Whenever there is a receivable, there is always a risk that they may not pay, may get bad debts. So receivable may be overstated. Similarly, company wants to include receivable of 980 in the form of discount or in the form of any payment being received. There is always a risk that the person may not pay. So receivables may be overstated. Review post-year end payments from supplier to ensure receivable was correctly recorded. How to check receivable, whether you have recorded the receivable correctly or not. Review post-year end payments. If after the year end we are receiving 980, that means our receivable were correct. And if 980 was not received post-year end payments after the year end, then receivable was incorrect. Okay. So whenever there is a receivable, there is always a risk that he may not pay. So receivables may be overstated, and review post-year end payments. Sixth point. In December, Pimento began making online sales directly to general public via company's website. So companies started to make online sales via website. Online transaction should be automatically recorded in company's accounting system via direct link with the website. So online transaction should be automatically recorded in company's accounting system. You are making online sales, online transaction should be automatically recorded in the company's accounting system. During first few months, there were some technical issues, meaning website sales were not automatically recorded in the accounting system. Website sales were not recorded in accounting system. There is a risk that sales are understated. Simple. When website sales are not recorded, your sales are understated. Discuss with management and perform detailed substantive testing to ensure all sales correctly included in accounting system. What else you can do? It's saying that website sales were not recorded, so sales are understated. And response, you need to perform detailed testing to ensure all sales are correctly recorded. Okay, 6 have been done. Please copy, then we will move forward. Okay. Now there are two final risks, so you have gained good marks because all these risks were straightforward. Okay. Now for two, you have to just look around at what can affect the financial statements. So you see, the audit file for the previous year's audit includes details of an adjustment which was required to operating expenses resulting from incorrect cutoff of selling cost. An adjustment is required from previous year's audit in operating expenses. The audit file for previous year includes audit details. The audit file for previous year's audit includes details of an adjustment. Previous year's audit files includes adjustment, which was required in operating expenses. Okay, so adjustment is required from previous year's audit file in operating expenses. What can be the risk? There is a risk that this adjustment is not made, hence operating expenses and profits may be misstated. So from previous year audit file, it is being seen that an adjustment is required. So there is a risk that this adjustment is not made. Previous year's audit file says you need to make an adjustment in operating expenses. There is a risk that this adjustment is not made. And if adjustment in operating expenses is not made, operating expenses profits may be misstated. So what can be the response here? Discuss with management and ensure that the required adjustment is made in operating expenses. There was a risk that adjustment is not made, so operating expenses may be misstated. So you need to discuss with management and you need to ensure that this adjustment is made. Last was an easy point. In May 2005, a fraud was discovered, so you can write about this fraud and response in fraud. The audit team needs to remain alert throughout the audit. There was another thing in there. In May 2005, a fraud was discovered in the finance department. Finance clerk was found to be responsible, was dismissed. So fraud was discovered in financial statements. So due to this, financial statement we misstated, and for fraud, the audit team should remain alert throughout the audit. Okay. And another point, the remaining members of finance department have been allocated additional tasks until a replacement financial clerk can be found. This has led to a backlog in the processing of some accounting records. Since clerk is dismissed, additional tasks have been allocated to other members of finance department till replacement is found. One person is dismissed, his task has been allocated among others, okay, till we find his replacement. Okay, risk. There is a risk of increased errors in finance department as other members may be overburdened and make errors. So, sir, you told always right, inherent control detection risk or under overstated. What is here? Now, when one person goes and his work is shifted to others and he's overburdened and he makes errors, this is always an inherent issue. That if someone overburdens me, it's an inherent built-in issue that I will be overburdened and make errors. Okay. So there's a risk of increased errors in finance department as other members may be overburdened, make errors, leading to increased inherent risk, because you have to write either inherent control detection risk or over understated. I cannot write here over understated, but that's a built-in inherent issue. When someone leaves, his work is distributed to others, they are overburdened, they are likely to make errors. This is an inherent issue. Response: the audit team shall remain alert throughout the audit for any errors in finance department. This point is not only for fraud, it is also for error. That when there is a fraud, the audit team should remain alert throughout the audit for any fraud in finance department. And if there is a risk of error, the audit team shall remain alert throughout the audit for any errors in finance department. We have got 8 points. We have got 16 marks. If you are unable to capture all it, trust me, at least 6 points were very, very easily capturable. So out of 16, 12 marks were very easy, but still we will wish that you go towards the maximum marks. Okay, please copy so that we can move forward. Okay, now I think we should start the next part. Describe substantive procedures auditors should perform to obtain sufficient appropriate audit evidence in relation to trade discount receivable. You see, we have done 20 marks of this question. The first 4 marks responsibilities of auditor in relation to fraud. And then the next part where 8 audit question responses were asked, 6 were really easy, 2 I had to find. Now, substantive procedures in relation to trade discount receivable. It's a receivable, right? You know this case? that company receives a discount from main supplier. Okay, so the amount is reclaimed after the year end. Okay, so Pimento is expecting to include a receivable in relation of the discount of 980,000 at the year end. So supplier gives them a trade discount. The company's knows and the contract says that the contract will be claimed after the year end. So company is planning to claim a receivable of 980,000 discount it is due to receive. So substantive procedure. So it's just a receivables thing. So you need to write substantive procedures mainly of receivables here. So receivables were basically taught to in substantive procedures. So first one, which I wrote in audit risk responses as well. Review post year end payments from supplier. Ensure receivable figure was correct, right? How do you check in receivable? Post year end payments. You can write in cash book or bank statement to elaborate your point. But this has been discussed in suppliers that to check receivable, whether this 980,000 receivable is correct or not, you can check it with post year end payments from supplier. If any post year end payment is coming, this gives you evidence that receivable was correctly included, and there is no post year end payment. That means receivable was not correct. So receivable is always verified by post year end payments. I know you have been taught this concept that if I include a receivable of 980,000, okay, auditor can perform a substantive procedure like check post year end payments. Obviously, if you have claimed a receivable, you should receive the payment. So if after the year end there is payment coming, then receivable is correct, else not. Then remember one point, compare receivable with prior years, investigate difference. Compare discount receivable with prior years. Investigate any differences. So another point of receivables which has been studied in classes came here. What else you can do? Circularization. Send a confirmation letter to the supplier for evidence of $980,000 receivable. You can send a confirmation letter to the receivable to verify the balance. Okay. Similarly, there is a thing that in accordance with supplier contract amount is reclaimed after the year end. Review terms and conditions of contract with supplier to verify that company is eligible for discount receivable. Okay, since contract is given, so you can review the terms and conditions of the contract to ensure that they are eligible for discount receivable. 4 marks for procedure. Mainly it was discount receivable. So we worked on receivables, confirmation letter, prior years comparison, investigate difference, review posture and payments, and since contract was given, so read the contract. Now, just while I was recording the class, I just received a message from a student that I am unable to solve this requirement. He's saying that I solved partly very well responsibilities of auditor in relation to fraud. I solved risk responses part really well. My 6 responses risks were very good. 2 I had to struggle. Okay. But he said I'm unable to handle this part. So just because have this question be like this, describe substantive procedures auditors should perform to obtain sufficient appropriate audit evidence in relation to receivable. You could have written receivable. But for obtains sufficient appropriate audit evidence in relation to discount receivable, this created many thoughts. How will I write discount receivable? It's just receivable, right? Had it been written receivable, you would have easily written 4 points. But discount receivable is confusing you. Make sure if it's receivable, any type of receivable, you apply the procedure of receivables. Okay, please copy this. Okay, let's wrap the last part of this question. What is there for 6 more marks? During a meeting, Pimento's finance directors mentioned that audit partner that he's keen to align the objectives of Pimento Company with the auditor's Coronado. To assist in achieving this, he has suggested that audit fee could be based on a percentage of Pimento's final profit for the year. Pimento's finance director has also requested that Coronado provide some accounting and bookkeeping services. Services proposed would be of a routine nature. One of Pimento's main suppliers, Harper, is also audited by Coronado. Due to negative articles in the press, Pimento's finance director has some concerns over financial stability of Harper. He has asked the audit partner to inquire of Bangalore's audit team as to whether there are any going concern issues which would affect the supplier's ability to continue to trade. The audit manager is currently carrying out a review of staffing for Pimento's audit. She's considering including audit assistant, who is the daughter of finance director of Pimento. Now, I will read this easily, slowly, but the requirement, I just want to move towards the requirement first. That's 6 marks, very easy. Identify and explain 3 ethical threats which may affect Coronados's audit of Pimento, and for each threat recommend safeguards. So threats and safeguards. Okay. 6 marks means 3 threats and 3 safeguards. The table is made. Let's start. During a meeting, Pimento. Who is Pimento? Pimento is the client. Pimento's finance director has mentioned to the audit partner that he's keen to align the objectives of Pimento with auditor. Finance director is saying to the partner that he's keen to align the objectives of Pimento with auditors. Connor. To assist in achieving this, he has suggested that audit fee could be based on a percentage of Pimento's final profit. Pimento's finance director has also requested that Coronado audit firm provide some accounting and bookkeeping services.
services proposed would be of a routine nature. Okay. One of Pimento's main suppliers, Habenro, is also audited by Cornado. So Cornado audit firm also audits suppliers. Due to negative articles in the press, Pimento's finance director has some concerns over the financial stability of Habenro. He has asked the audit partner to inquire of Habenro's audit team as to whether there are any going concern issues. Audit manager is currently carrying out a review of staffing for Pimento staff. The audit manager is carrying out a review of staff. She is considering including audit assistants, who is the daughter of finance director of Pimento. Audit manager is currently carrying out a review of staffing of Pimento's audit. Audit manager is considering including audit assistant, who is the daughter of finance director of Pimento. So audit manager wants to include an assistant, and she's the daughter of finance director of Pimento. Ethical threat safeguard. First one, very easy. Pimento wants the audit fee could be based on percentage of Pimento's final profit for the year. It has been suggested that audit fee could be based on Pimento's a percentage of Pimento's final profit. Remember this threat I have taught you. Audit fee based on percentage profit, contingent fees, self-interested. Okay. This indicates or creates a self-interest threat as contingent fee may compromise independence and auditor may not report any errors in profits to ensure profits are higher, so he gets more fee, right? Contingent fees on profits, self-interest rate, independence compromised. Why? Because auditor may fear losing income. Or you can write it right like the class. Due to fear of loss of income, auditor may not report any errors in profit, because if we'll report errors in profit, the profit may go down and its fees may go down. Okay, it's a clear case of self-interest rate. Remember safeguard. The offer of contingent fee shall be politely refused, and a fixed fee shall be asked based on time spent and experience of audit team members. Okay, has been studied multiple times. This point that contingent fees creates a self-interest threat. Independence may be compromised due to fear of loss of income. Auditor may not report any errors in profit to ensure profits are higher, they don't go down, and his fees doesn't go down. Politely refused. Fixed fee shall be asked based on time spent and experience of audit team members. Finance directors require that Cornado provides some accounting and bookkeeping services. Okay. Finance director is requested that the audit team who is doing audit, they provide accounting and bookkeeping services. So the audit team provides accounting and bookkeeping services and then do audit. This indicates or creates a self-review threat as independence may be compromised due to fear of highlighting on mistakes. The audit team, while doing audit, may not identify their own mistakes they did in providing accounting service. Like, for example, I'm an auditor and I'm asked to provide accounting services like make my payroll records. So I made the payroll records or I made the taxation records and then I'm auditing. If I made any mistake in my payroll working or tax working, I am auditing them. I won't highlight my own mistakes because I'll be afraid what people will say about me. Oh my God, you are such a big company, they made mistake. So fear of highlighting own mistakes makes people biased. So when you are doing accounting, bookkeeping services, and then you are auditing, you might not identify your own mistakes, self-reviewing threat. And this compromises independence when you're not highlighting your own mistake. Safeguard, Chinese wall concept. Separate audit teams shall be used for audit and separate teams for accounting and bookkeeping. It was a very easy question. Audit manager is planning to include audit assistant, who is the daughter of finance director of Pimento. The audit manager is planning to include daughter of finance director as audit. So what is this? The audit manager wants to include daughter of finance director as audit assistant in audit team. What is this? A clear case of familiarity threat. Audit team is auditing. In that, there is audit assistant who is the daughter of finance director. Who is the finance director who made financial statements? Who is auditing those financial statements? His daughter. Familiarity case. Will she highlight her own father's mistakes? No. Finance director made financial statements. Who is auditing? Not independent people. Daughter, son. How will they will identify their father's mistakes? Clear familiarity threat. This can also be self-interest threat. So I've completely described the audit manager is planning to include daughter of finance director as audit assistant. This is a clear-cut case of familiarity or self-interest. Independence is compromised due to fear of personal relation. The daughter or son may not go against their father, may not highlight their father's own mistakes due to personal relation. Fear that personal relationship will be damaged. Safeguard. The daughter of finance director shall not be included in audit team, and someone independent, shall be included. 6 marks, in my opinion, 6 easy marks. Okay. In my opinion, out of these 4, it's just receivable. 2, send a confirmation letter. Post-student payments are very easy. You got 2 marks from here. Audit risk 16. Let's suppose you got 5 risks properly and responses. Trust me, 5, 6 were very easy. 10 marks, and then a very easy requirement. Responsibilities has occurred many times. So 4, and if I count 10 from here, 14, and 2 from here, 16 and 6. Still, you get very high 22 marks, which is approximately 50% of passing marks. So make sure you have complete preparation. The whole paper is predictable. You can easily do it. Okay, please copy this.
Okay, so question number 1 is done. Let's move, I think, to question number 2 now. Now, the 2 questions are of 20 marks. So second question is, this scenario relates to 2 requirements. It is 1st July, you are an audit supervisor with Revere. This is the audit firm. Preparing draft audit programming, reviewing extracts from internal controls documentation for your client Harper in preparation for interim audit for the year ending 30th September 2005. Although payroll and inventory are standalone systems, sales and purchase modules are fully integrated into computerized accounting system. Harper is a home furnishing retailer with a head office, a central warehouse, and 20 stores across the country. Harper Company sells goods to individuals and corporate customers. So it is 1st July. You are audit supervisor with Revere. Who is Revere audit firm? Preparing draft audit program, extracts from internal controls documentation for client Harper in preparation for interim audit. Payroll and inventory are standalone items. Sales purchase systems are fully integrated into computerized system. Harper is a home furnishing retailer, head office, central warehouse, 20 stores across the country. It sells goods to individuals and corporate customers. Sales. Goods sold to individuals are paid for at the time of purchase with cash or credit card, and each store must submit a daily sales report to the finance department located at office at the end of each day. The daily sales report for all stores are reconciled to the cash and credit card taking report from the cash registers every Friday by a senior finance clerk. What is happening? Goods sold to customers are paid for at the time of purchase by cash or credit card. Goods are sold with a cash or credit card. Each store must submit a daily report to finance department. Each store has to submit daily report to finance department located at head office at the end of each day. Daily sales reports for all stores are reconciled to cash and credit card takings from the cash registers every Friday by a senior finance clerk. So each store is submitting daily report to finance department at the end of each day. They're submitting daily report, but these daily reports are reconciled to the cash and credit card takings. Either paying is by cash or credit card, sale is through cash or credit card. So the daily report is reconciled either to cash or credit card every Friday. New corporate customers are required to undergo credit checks, but on some occasions, this has not happened due to staff shortages in the sales department. Sales are also generated by members of Harper Company's sales team visiting corporate customers' premises. So new customers are required to undergo credit checks, but on some occasions, this has not happened due to staff shortages. Sales are also generated by members of Harper sales team visiting corporate customers' premises. Sales are not only through cash credit card, they're also generated by sales team members who visit corporate customers. They visit corporate customers and generate sales. Corporate customers are provided with credit terms of 30 days and all invoices are paid by bank transfer. Each day, Sam Turner, a finance clerk, posts the bank receipts from online banking system to the bank ledger, updates customer accounts, and prepares bank reconciliation. So corporate customers are given 30 days credit. Invoices are paid by bank transfer. Each day, Sam Turner, who is Sam Turner? A finance clerk. He posts the bank receipts from the online banking system to bank ledger, updates customer accounts, and prepares reconciliation. So I think Sam Turner has many tasks. Purchases and inventory. Harper has a purchase ordering department based at its head office. On receipt of approved purchase requisition, a purchasing clerk raises a purchase order based on approved supplier listing, which is regularly updated. Purchase orders over 5,000 are authorized by purchasing director, and those below 5,000 are processed immediately. So Harper has a purchase ordering department based on head office. On receipt of an approved purchase requisition, purchasing clerk raises a purchase order based on approved supplier listing, which is regularly updated. So approved supplier list is regularly updated. Purchase orders over 5,000 are authorized by purchasing director, below 5,000 are not authorized, immediately processed. Okay, so above 5,000 are authorized, below 5,000 are not authorized. Goods received in the central warehouse are inspected for quality and quantity and checked against supplier's delivery note. So goods received are inspected against supplier's delivery note. As occurred many times in the past paper, goods received are inspected against supplier's delivery note. A GRN is electronically produced by a member of central warehouse and a notification is sent to finance department. Only warehouse and finance department have access rights to view the completed GRNs. GRN is prepared, notification is sent to finance department. Only warehouse and finance department can view the GRN. A payables clerk inputs purchase invoice into the system and updates the individual supplier accounts. Document count controls are used to ensure the correct number of invoices are being input, but no other checks are performed. Payable clerk inputs invoices into system, updates individual supplier accounts.
Document count controls are used to ensure correct number of invoices have been input. No other checks are performed. Apart from counting, no other checks are performed. So one was information about sales. I will read it again when solving the question. One information about purchases. I will again read it while reading the question, attempting the question. Third is of payroll. All employees are paid by bank transfer each month. As the payroll system is computerized, it is not felt necessary to carry out checks on the payroll calculations, as all updates to the system are automatically downloaded from the software provider and tax authority. So see, all employees are paid by bank transfer. As the payroll system is computerized, it is not felt necessary to carry out checks on payroll calculations. We don't think it's necessary to carry out checks on payroll calculations, as all updates are downloaded from the software provider and tax authority. All members of the payroll department have access to change employee standing data. Standing data, I taught you master file. All members of payroll department have access to change master file. Okay. All members of payroll department have access to change standing data master file. On occasion, employees are required to work overtime, particularly in busy periods. Overtime is paid monthly in arrears at the end of the month in which it is worked. All overtime work reports are reviewed by the finance director each quarter after the overtime has been paid. Sometimes employees are required to work overtime, particularly in busy periods. Overtime is paid monthly in arrears at the end of the month in which it is worked. We pay them in arrears. All overtime work reports are reviewed by finance director each quarter after the overtime is paid. So when is finance director reviewing? After the payment has been made. Okay. So these are the three informations: payroll, purchases, and sales. What is happening? I read. Okay. I will read it again slowly when I'm doing the question, but this seems to be a weakness question. There are some weaknesses here. Okay. So let's see what the requirements are. Okay. And solve this question. Okay, so after reading the scenario, let's move towards the requirement. The first requirement: Harper Company currently has a small internal audit function and is considering outsourcing internal audit function to a specialist company, Tennyson Company. So after all the information that what is the company doing, what is happening in sales, what is happening in purchases, what is happening in payroll, the first requirement is Harper has a small internal audit function and is considering outsourcing internal audit function to a specialist company, Tennyson. Using the table below, describe two advantages, two disadvantages to Harper of outsourcing internal audit function. You do not need to refer to the scenario. No need to refer to the scenario. Very easy for free marks. Okay, two advantages, two disadvantages of outsourcing. Now, if you go in outsourcing the internal audit function, if you go in chapter 5 notes, the internal audit, okay, here. I have taught you advantages of outsourcing, disadvantages. Just try to gain for free marks. Okay. So you can write any two. With the professional outsource department, less time is required on audit activities. Disadvantages is simply related to saving of time. That when you have outsourced, you don't need to spend your own time on internal audit activities. Okay. Internal audit staff does not need to be permanently recruited or hired. Obviously, with outsourcing, with a benefit that you have outsourced it to some external company, you don't need to manage stuff yourself. So cost savings. Okay. Two disadvantages. Outsourcing may be expensive to the company. Outsourcing may not be as flexible when problem arise since you don't have permanent presence. That's it for easy marks. Okay, you have a range of advantages, disadvantages. I would just ask two advantages, two disadvantages of outsourcing. So I wrote them. You can quickly copy so I can move forward towards the next parts. Okay, what's next? Identify and explain 8 deficiencies in Harper system of internal control. Provide a recommendation. Very, very easy requirement, honestly. 8 deficiencies and recommendations controls. Okay. So for this, I have to read the scenario again because these things are really important. It is 1st July. You are an audit supervisor with Revere and Company. So Revere and Company is the audit firm preparing draft program and reviewing extract from internal controls documentation for your client Harper. Although payroll and inventory are standalone items, the sales and purchase modules are fully integrated into the computerized system. Harper is a home furnishing retailer with a head office, central warehouse, and 20 stores across the country. Harper sells goods to individuals and corporate customers. So Harper sells goods to individuals and corporate customers. Sales. Goods sold to individuals are paid for at the time of purchase with cash or credit card. Each store must submit a daily sales report to the finance department located at office at the end of each day. This is good. Goods sold are paid with cash or credit card. Each store must submit a daily sales report to finance department located at office at the end of each day. So at the end of each day, each store has to submit a daily report to the finance department. Daily sales reports for all stores are reconciled to the cash and credit card taking report from the cash registers every Friday. So reports are submitted daily. The daily reports are reconciled to cash and credit card reports from the cash registers every Friday. Now, daily report is being submitted each day, which is very good. But the reconciliation is done after every 1 week. Okay, this is the problem. Daily sales report is being submitted to the finance department head office at the end of each day. But daily sales report is reconciled with cash and credit card after 1 week. This is a deficiency. Daily sales report is reconciled to cash and credit card taking report every Friday. So when reconciliation is done after 1 week, this increases chances of errors not being highlighted and resolved on a timely basis. Obviously, when reconciliation is not done regularly, any errors won't be highlighted. Any errors won't be highlighted and resolved on a timely basis. Reconciliation should be done on daily basis to ensure errors are identified and resolved on a timely basis. Reconciliation should also be reviewed by a responsible official. Okay, that's it. Weakness number one, daily report was submitted to finance department, but reconciliation was done every Friday. There are 20 stores. If you will do reconciliation every Friday, people might be thinking this is reconciliation very good 1 week, not even monthly basis, but check the nature of the business. 20 stores, daily sales. So reconciliation being done from credit and cash takings at the end of every week, too much burden then. Errors won't be identified and resolved on a timely basis. Okay. Reconciliation should be done on a more regular basis to ensure errors are resolved on a timely basis. It should be responsibly reviewed by a responsible official. And late reconciliations can also increase chances of fraud. Because if 1 week we have no reconciliation, people have 1 week to misappropriate things. They will know errors after 1 week, and any person who wants to do fraud can do in between. Okay. New corporate customers are required to undergo credit checks, but on some occasions this has not happened due to staff shortages. So new customers are required to undergo credit checks, but on some occasions this has not happened. See, people say, can we copy from the question? Yes, to save time you can do. This is a weakness, that new customers are required to undergo credit checks, but on some occasions this has not happened. So when customers have to undergo credit checks, but this has not happened. We have studied all this. When customers have to undergo credit checks and this is not happening. So what is the impact? Because in deficiency, you have to write the weakness, its impact, and then recommendation. This can result in goods being sold to non-creditworthy customers. You're not undergoing credit checks, so goods can be sold to not creditworthy customers, resulting in increased chances of bad debts. Okay. Recommendation. All new customers must undergo credit checks before making any sales to them to ensure there are reduced chances of bad debts. All customers must undergo credit checks before making any sales to them. If they're not creditworthy, don't make sale to them to ensure there are reduced chances of bad debts. Okay. Corporate customers are provided with credit terms of 30 days. All invoices are paid by bank transfer. Very good. No cash, only bank transfer. Very good. No weakness. Each day, Sam Turner, a finance clerk, posts the bank receipts from the online banking system to bank ledger account, updates customer accounts, prepare bank reconciliation. Too much work being done by one. Lack of segregation of duties. Weakness number 3. Copy it. So Sam Turner, a clerk, is posting the receipts, updating the accounts, prepares bank reconciliation. This is lack of segregation of duties, allowing one person to do all tasks can result in increased errors and increased risk of fraud. If one person is doing all tasks, this can result in increased risk of errors because one person is doing all the tasks, as well as increased chances of fraud. One person has too much powers, he can do fraud. Recommendation. The task of posting bank receipts, updating customer accounts, and doing bank reconciliation shall be performed by different members of finance department to ensure reduced risk of fraud and okay. I have done 3 weaknesses. I needed to write 8, so please copy this so I will move forward.
Okay. Harper has a purchase ordering department based at its head office. On receipt of an approved purchase requisition, a purchasing clerk raises a purchase order based on approved supplier listing, which is regularly updated. Very nice. Approved supplier listing is regularly updated. Very good. Purchase orders over 5,000 are authorized by purchasing director, and those below 5,000 are processed immediately. Only purchase orders above 5,000 need authorization, and below 5,000 don't need authorization. Have studied multiple times. If only purchase orders above 5,000 need authorization, you don't authorize below 5,000. How? This is not the only answer that you write. This can result in increased risk of fraud, and he gives you marks. No, this can result in increased risk of fraud as people may purchase unnecessary goods below 5,000 to avoid authorization, leading to loss for the company. You see, only 5,000 above dollars need authorization. So a person who has to do fraud, he will say, okay, let us purchase something not above 5,000 because in that case I need authorization. Let's start purchasing unnecessary things below 5,000. No authorization is required. He can purchase, and this is a loss for the company. So remember the recommendation. All purchase orders, regardless of limit, shall be authorized by senior management to ensure only necessary purchases are made. So all purchase orders should be authorized by senior management, regardless of limit, to ensure everything is authorized. When people know that anything we buy needs to be authorized, they won't make unnecessary purchases. But in the current scenario, people will not buy anything unnecessary above 6,000, or even if they have to buy something for 6,000, $7,000, they will ensure they purchase them in two pieces of 3,000 below 5,000 to avoid authorization. This has been studied. Okay, that people will purchase in small pieces below 5,000 to avoid authorization, hence making unnecessary purchases. For example, people are in the company and company says, okay, any food you consume above $1,000 needs to be authorized. So people who want to consume food of $1,200, what do they know? They say, okay, if $1,200 is purchased, we need to authorize them above 1,000. Let us purchase them in small pieces below 1,000, like $600. This avoids authorization and we get unnecessary thing. Okay. Goods received in the warehouse are inspected for quality and quantity and checked against the supplier's delivery note. This is a big weakness, has come up many times in the past papers. In fact, all these requirements are repeated. Goods received in the central warehouse are inspected for quality and quantity and checked against supplier's delivery note. Goods received being checked against good supplier delivery note will mention goods that have been delivered, right?
supplier's delivery note will mention what goods he has delivered. You are checking your goods against what he has delivered. Not goods that have been audited. This may result in company accepting goods not which they have not audited. Okay, you are checking goods received against supplier's delivery note. So you have received 10 units. What will the supplier delivery note mention? 10 units. You say, oh, fine. 10 units I ordered. Sorry, 10 units I have received, and supplier delivery note mentions 10. Perfect. So supplier's delivery note does not mention what goods you ordered. It mentions what he delivered. So he has delivered 10. The note will mention 10. You are not comparing the goods received against what you ordered, the purchase order. You are comparing goods received with what he has sent. So this may result in you accepting those goods which you didn't order, but the supplier delivered. Goods received shall be checked against purchase order to ensure company has received those goods which it ordered. Now let me explain it to you by example. I ordered 10 units. I sent a purchase order 10 units. Okay. Supplier sent 8 units. I counted 8 units and checked it against delivery note. So supplier delivered 8 units. So delivery note will also mention 8 units. I will count units 1, 2, 3, 4, 5, 6, 7, 8. See, delivery note also mentions 8 units. Fine. Okay, go. This is wrong. Supplier's delivery note is mentioning 8 units and you received 8 units. How can this be okay? You ordered 10 units. Purchase order was of 10 units. So you should have received 10 units. You received 8 units. Had you checked the units received against purchase order, you would have found that I ordered 10 in purchase order. I received 8. The error is there. But what you're doing is you are checking goods received against supplier's delivery note. Supplier's delivery note will mention 8 units. What he sent, 8 units are there. Comparison will mean you are accepting goods which you didn't order. Okay. Similarly, you ordered 2 units of A, 2 units B, 2 units C. 6 units in total. Supplier delivered 6 units, but change it. 3 units A, 2 units B, 1 unit C. And on the delivery note, he also mentioned 3 units A, 2 units B, 1 unit C. So you will say, okay, 3 units A, 2 units B, 1 unit C received. If you check tick against your purchase order, what you ordered, 2, 2, 2, you will immediately pick an error. But you are checking 3 to 1 units against what he has delivered in delivery note, 3 to 1. You will say, okay, that means you are accepting goods which you didn't order. So goods received shall never be checked against supplier's delivery note because that will only mention what he delivered, not what you ordered. Goods received shall only be checked against purchase order to ensure what you ordered is the same as what you received. Okay. A payables clerk inputs purchase invoice into system, updates the individual supplier account. You can write this as well. Only warehouse and finance department have access rights to view the completed GRNs. A payable clerk inputs purchase invoice into system, updates individual accounts. You can say payable clerk is doing 2 things: inputting purchase invoice, updating supplier accounts. So payable clerk is doing 2 things, lack of segregation, same point. But if you have other points, let's just avoid it. If I'm short of points, I will write this point. Okay. Document count controls are used to ensure correct number of invoices have been input, no other checks are performed. Okay. So we can pick one here, like segregation of duties is lacking, but we've already written. If I'm short of points, I will write this, else I will move forward. Okay. All employees are paid by bank transfer each month. Very good. As the payroll system is computerized, it is not felt necessary to carry out checks on payroll calculations, as all updates to the system are automatically downloaded from the software provided in tax authority. So as the payroll system is computerized, it is not felt necessary to carry out checks on payroll calculations. No checks are being done on payroll calculations. I have been discussing this many times in the past paper. System generated calculations are not checked. As the system is computerized, it is not felt necessary to carry out checks on payroll calculations. This can result in loss of cash, as any errors made by system will not be identified and employees may be paid wrong amounts. Okay, system generated calculations are not being checked. Loss of cash, because system generated calculations may have errors which you're not checking, which won't be identified. Employees may be paid wrong amounts. The payroll system is generating calculations, and you are not doing any checks on payroll calculations. So if there are any errors that won't be identified, employees may be paid wrong amounts. Okay. Recommendation. Some people also write this can result in loss of employee goodwill, right? Because if employees are paid wrong amounts, more amounts, loss of cash. But if they are paid wrong amount, less amounts, this results in their dissatisfaction, which is called loss of employee goodwill. Employee says, what is this type of company? They are paying me less amounts. So system generated calculations are not checked. This can result in errors, which you are not checking. Okay. Errors made by the system is not being checked. So errors won't be identified. Employees will be paid wrong amounts. If more amounts are paid, this can result in loss of cash. If less amounts are paid, loss of employee goodwill. So you can also write this can result in loss of employee goodwill. Recommendation you have studied. Should be checked, reviewed, and signed by a responsible official before making payments to ensure correct amounts are paid to employees. Okay, you have written 6 weaknesses and recommendation, 8 were required. 12 marks are in the bag, 2 more, 16 marks in the bag. Trust me, it was a very easy question. Okay, write these 3 so that we can write 2 and close this question.
Okay. All members of payroll department have access to change employee standing data. I've studied multiple times. All members of payroll department have access to change employee standing data. You know, I've taught you standing data is master file. Master file is a confidential document allowing all members to have access to it. May result in confidentiality breaches, unauthorized changes being made, and increased risk of fraud. What do I mean by all these? Okay, all members have access to the master file. A master file is a confidential data. It has employees' personal details. Allowing all members to have access may result in confidentiality breaches. Okay, unauthorized changes. Let's suppose master file, everyone has access. Someone changes the other employee's bank details. This is unauthorized change. His salary will go in unauthorized account. This can happen. Master file is a confidential data. Increased risk of fraud. People knowing each other's salaries, changing each other's salaries, doing fraud. Okay. Changing bank account details of individuals and transferring their salaries into their own accounts. Big risk of fraud. Okay. Therefore, access to master file, that is standing data, should only restricted to senior members of finance department to avoid fraud and confidentiality issues. Okay. All members of payroll department have access to change employee standing data. Standing data master file is a confidential document allowing everyone to have access, results in confidentiality breaches, people changing details of others, frauds. Master file should be restricted to senior members to avoid fraud and confidentiality issues. One last. On occasion, employees are required to work overtime, particularly in busy periods. Overtime is paid monthly in arrears at the end of the month in which it is worked. All overtime work reports are reviewed by finance director each quarter after overtime has been paid. Just see what is happening here. Overtime work reports are reviewed by finance director after overtime is paid. This means there was no authorization payment was made, and then finance director reviewed the overtime worked reports. See, a very funny thing. First, finance director should review the work report, then payment shall be made. What is happening here? Payment is made, and then overtime work reports are reviewed by finance director after overtime is paid. So payment is made, and then he's seeing overtime work report. Opposite. This may result in employees getting paid or even
those hours which they have not worked, leading to loss for the company. Now, for example, a person is paid for 20 hours, and then overtime work report is checked by the finance director where he only worked 18 hours. What can he do? He has worked 18 hours, he should have been paid for 18 hours, but he has been paid for 20 hours. He has been paid for 20 hours, then you are checking, oh, he should only have been paid for 18 hours. What can you do? Payment is already being made. So payment is made for even those hours which they have not worked. This is a loss for the company. Okay. Overtime worked reports should be reviewed by finance director before paying overtime to ensure employees are only paid for those hours which they actually worked. Okay. First authorization, then payment. What is happening here? After overtime is paid, then you are checking the overtime work reports. Wrong. The payment is made, then you are checking overtime work reports and say, oh, we made paid more. So you are paying for hours not even worked. Better first check the overtime work reports, then pay to ensure employees are only paid for those hours that are actually worked. Okay. So I hope this was a very easy question. It's clear to you. So we have ended this question. I'm giving you time to copy. We are done with two questions. Now we're left with only one question. We will move on that. Okay. Okay. Let's move forward to the next question now. This scenario relates to four requirements. Okay. Now we have to read the scenario. It relates to four requirements. It is 1st July. You are an audit supervisor of Daniel and Company. So if you're an audit supervisor of Daniel and Company is the audit firm. Final audit of Everest for their end date 31st May 2005 is due to commence. So final audit of Everest, which is the client, is due to commence. Everest manufactures garden furniture. Its draft financial statements show assets of 32.2 million, PBT of 1.3 million. Following matters have been brought to your attention. Property, plant, equipment. Everest has 3 factories located across the country, a head office, and 1 central warehouse. In March 2005, an earthquake occurred near the site of one of the factories. The factory was significantly damaged. However, company's other properties and inventories were unaffected. Company spent 0.8 million repairing the factory, of which 0.5 million was recognized in PPE. It also purchased new plant and machinery costing 0.6 million to replace items which had to be scrapped as they were damaged beyond repair. So, the following matters have been brought to your attention. Everest has 3 factories, head office, central warehouse. In March, earthquake occurred near factory site, one of the factory site. Factory was damaged. Company's other properties and inventory were unaffected. Company spent 0.8 million repairing the factory, of which 0.5 million was recognized in PPE. It also purchased new plant and machinery costing 0.6 million to replace items which had to be scrapped as they were damaged beyond repair. Current asset receivable. Everest has submitted a claim to its insurance company to cover the damage to PPE as well as the loss of profits, as it was unable to use the factory for 2 months while it was being repaired. The total amount claimed is 1.8 million, which comprises 0.4 million for loss of profits, 1.4 million for damaged PPE. Company has included 1.8 million as current asset receivable within the draft financial statements. Okay. Since factory was damaged, company submitted a claim to its insurance company to cover the damage to PP as well as loss of profits, as it was unable to use the factory for 2 months. Total amount claimed is 1.8 million, of which 0.4 million is loss of profits, 1.4 million is damaged PP. Company has submitted a claim, 1.8 million, and it has included it in receivable that I will receive this claim. Okay. Going concern. Everest has an overdraft facility of 2 million. Bank account balance at the end of the year was overdrawn by 1.95 million, presented as current liability. Everest is reliant on the overdraft facility to operate on daily basis. Bank reviews the renewal of the overdraft facility annually. The covenants attached to the overdraft facility require a PBT of above 1 million, total assets of at least 30 million. So Everest has overdraft of 2 million facility. Account balance was overdrawn by 1.95, presented as current liability. Everest is reliant on overdraft facility to operate. Bank reviews their overdraft facility annually. Covenants attached to overdraft require PBT of above 1 million, so their PBT is 1.3. And total assets of at least 30 million. So I think their assets were 32.2 million. So renewal of overdraft facility seems okay. Okay. So that's it for the question. Now let's see what basically the requirements are. Okay, so let's read the requirements now slowly. It is 1st July. You are audit supervisor of Denali in grid firm. Final audit of Everest is due to commence. Everest is a client. Everest manufactures garden furniture. Draft statement show assets of 32.2, profit of 1.3. Following matters have been brought to your attention. Everest has 3 factories, head office, 1 warehouse. In March, an earthquake occurred near one of the factories. Factory was damaged. However, company's other properties and inventory were unaffected. Company spent 0.8 million on repairing the factory, of which 0.5 million was recognized as PPE. It also purchased new plant and machinery costing 0.6 million to replace items which had to be scrapped. So company submitted a claim to insurance company to cover damage to PP and loss of profits. They submitted a claim of 1.8 million, of which 0.4 million was loss of profits, 1.4 million damage PP, and this 1.8 million is included as current assets. Okay, going concern. Everest has an overdraft facility of 2 million. Bank account balance at the end of the year was overdrawn by 1.95, presented at current liability, and the overdraft facilities renewal. Banking is asking 1 million, profit, assets 30 million, which we have. What is the requirements after that? Describe substantive procedures auditor should perform to obtain sufficient appropriate audit evidence in relation to matters identified regarding PPE. So it's substantive procedures for PPE, 6 marks means 6 points. Now, if we read the PPE point, you have to write substantive procedures of property, plant, equipment, and you made 0.8 million repairing, of which 0.5 million was treated as capital expenditure. So it's capital expenditure also involved. It purchased new machinery costing 0.6 million. So additions also involved. And items had to be scrapped. Disposal also involved. So this is what you mean referring to the scenario. You cannot just write all the 6 procedures of property, plant, equipment, okay, which is an asset. You have to make sure that inside property, plant, equipment, you have to write procedures of property, plant, equipment. Since you spent 0.5 million on capital and 0.8 million, out of which 0.5 million was capital, you have to write this as well. Purchasing new machinery, capital expenditure, additions, scrapping, disposals. Okay, so you have to write substantive procedures from the notes. Property, plant, equipment is basically tangible non-current assets. Okay, you have to write it for tangible non-current assets, but make sure in this you just don't randomly write all the tangible non-current assets, because this involves capital expenditure as well. So you need to write this capital expenditure procedures as well. Okay, company has treated 0.5 as capital, balance as repairs. So capital expenditure point, then you have disposed items, so disposal points. So all in all, 6 points, not just from tangible non-current assets, but from additions, disposals, capital expenditure. Okay. 1 mark. First point, tangible non-current assets. Okay. Carry out a physical inspection of assets to verify existence. 1 mark. It looks small. Okay. Think like that. I cannot do anything. Read the examiner answers. Same point is written. Okay. Let me read the examiner answers point. Physically inspect a sample of assets via site visit to confirm existence. Physically inspect a sample of items by visiting to confirm existence. Carry out a physical inspection of assets to confirm existence. Same thing. 1 mark. Okay. Verify ownership of property by inspecting title deeds and registration documents. There was nothing mentioned like this that they purchased property. So I cannot write this point. Verify ownership of motor vehicles by inspecting motor vehicle registration documents. There was nothing mentioned that they purchased motor vehicles, so no need to write this point. Review lease agreements to ensure correctly treated as financial operating. There was nothing mentioned that we purchase assets on lease, so I cannot write this point. Select a sample of physically present assets in the company. Inspect assets register to ensure they're included. This you can do. Okay, so I wrote this point. I can write this: reconcile general ledger with schedule of PP. Okay. Perform reconciliation of non-current asset register to general ledger, investigate difference. I can write this. Recalculate the depreciation expense for the year. Obviously, assets have been included, so recalculate the depreciation expense for the year. Okay. Review depreciation policies for reasonable by comparison to last year. I can write this as well. Agree revalued amounts to valuation report. I can write this point. Why? Because there is nothing mentioned about revaluation. Now, this is what you exactly mean by referring to the scenario. Now, many people say, what if we write the notes point, the notes which you gave us? I always say you can write those points, okay? But you cannot be blind, okay? These points can be written, but what is meant by referring to the scenario? Make sure you are writing only those points which refer to the scenario. Like if you do like this in property, plant, equipment, it's obviously non-current asset. You just come up, take all these points and write any six. You will lose marks. Why? Because carry out a physical inspection of assets, that's fine here. How can you write ownership of property by inspecting title deeds, ownership of property, motor vehicles by inspecting motor registrations? Because it's never mentioned that you purchase property or motor vehicles. Had it mentioned that company purchased new property, it's just repaired. Had it mentioned company purchased motor vehicle, then these points would be okay. But if there's nothing like this, how can you write this? Review lease agreements. Did they mention they bought it on lease? No. However, if the scenario says we acquired on lease, then these points become relevant. So the notes point are relevant, but you should carefully think what you can write. You cannot write this agree revalued amounts to valuation report because there was nothing mentioned that we revalued the assets, right? However, it is mentioned, this point is perfect. So apart from all these points which were not relevant, whatever relevant points, where do they come from? From the notes. Now there was asset added as well. Okay, scrapped as well. Select a sample of additions, agree cost to suppliers invoice. Or obtain breakdown of additions, cast the list, all additions agreed in added in NC register. Same point you can write for scrap. Select a sample of disposals, agree proceeds to sales invoice, ensure disposals are removed from NC register. You can write both points combined if you want. Okay. Disposals, scrap, compare with supplier invoice, and ensure they're removed from asset register. I also taught you one point during the class. For additions, make sure compare with bank transfer. For disposals, compare disposals with banks to ensure the amount has been received, right? You can write one part from capital expenditure because it states that company spent 0.8 million repairing, of which 0.5 was treated as capital. For items treated as capital, agree to invoices to assess whether they are in fact capital and correctly included with PP. For items treated as repairs, you can write any point of this because company out of 0.8 million, 0.5 was treated as capital, 0.3 as repairs. Okay, so make sure for items treated as capital, any point would be okay. Okay, so I had more points, but the requirement is over. I could have written for 1 or 2 more points for capital, for disposals, for additions, for this. One thing I'm not sure, these notes point are relevant, but you must not think blindly that writing 6 out of these, no motor vehicle point discussed, no property point discussed, and still you're writing, and obviously you're losing marks. Only write relevance to the scenario. Okay? And this is what you mean. This means notes point are relevant, but not blindly. At least you should think smart. Okay? So please note this. From where did I write? From the notes. But I carefully use my mind, which I should write, which shouldn't. Okay? Please note this. Then I can move forward. Okay, describe substantive procedures auditor should perform to obtain sufficient and appropriate audit evidence in relation to matters identified regarding current asset receivable. Okay. So what are the matters in current asset receivable? Everest has submitted a claim to its insurance company to cover the damage to PPE as well as for loss of profits. So they have submitted a claim to insurance company to cover damage to PPE as well as for loss of profits as it was unable to use the factory for 2 months while it was being repaired. Company has submitted a claim to insurance company to cover damages to PPE as well as loss of profits. Amount claimed is 1.8 million, which comprises 0.4 million for loss of profit, 1.4 million for damaged PPE. Company has included 1.8 million as current asset receivable within draft financial statements. So this is a receivable. Okay. Describe substantive procedures auditor should perform on this receivable 4 marks 4 points. So you go in receivables and write perform a receivable circulation for a sample of receivables for non-responses, or you won't get marks. It is receivable, but it's something related to this insurance. Okay. So you're not selling to customer and it's getting a receivable. It's a receivable from insurance policy. Okay. So just mold it according to the scenario. Send a letter to customer. No, you're receiving from insurance company. So rather than sending a confirmation letter to customers, send a letter to insurance company at whether this 1.8 million which we have claimed, it is receivable. Okay. And what do you do for receivable? Review post year and bank statement to see whether any amounts have been received against this receivable. So it's basically receivable, but it's not a customer. It's an insurance company from whom you're receiving. So send a confirmation letter to insurance companies, find out their point of view on 1.8 million claim, whether this amount is likely to be received. Okay. And receivable, whether it was okay or not, can be verified by posture and bank statements. If amount is received, then receivable was okay. If no amount received, receivable not okay. So you can check posture and bank statements to see whether amounts have been received against this receivable. For insurance claim, we have a procedure: review insurance policy to understand any terms and conditions and whether company is insured against such issues. You can always check the insurance policy and insurance claims. Okay. And you can obtain written representation from management as to why they have included this 1.8 million as receivable. Okay, or you can discuss with management to get their viewpoint on this receivables. So it was a current asset receivable. I sent a letter to the insurance company, which are doing receivables. I checked posture and bank statements as I do in receivables. Insurance policy can be looked upon, written representation can be taken. Okay, so please note, then we'll move forward.
Okay, part C, 5 marks, very easy part. Describe audit procedures the auditor should perform in assessing whether or not Everest is a going concern. So audit procedures, whether company is going concern or not. In going concern, it's just mentioned about overdraft facility and some covenants attached. Overdraft is 2 million, company has overdrawn by 1.95. Bank reviews the renewal of overdraft facility and covenants attached require a PBT of above 1, assets of at least 30, which is there. Okay. Audit procedure in the going concern. Okay. So for this, we have to refer to the going concern chapter, and audit procedures and going concern have been taught to you. So in the chapter of going concern, there were events that cast doubt on going concern status and then audit procedures in going concern. Okay. Analyze and discuss cash flow, profit, other forecasted management, entities' latest available interim statements, terms of debentures, loan agreements, whether they have been breached, minutes of meeting, entities, lawyers, and regulatory actions like this. So 5 procedures. Analyze and discuss. Cash flow, profit, and other forecasts with management. Analyze and discuss entities' latest available interim financial statements. Review terms of debentures, overdraft, and loan agreements. To determine whether they have been breached. Read minutes of shareholder meetings, board meetings. For reference of financing difficulties. Inquire of entities, lawyers regarding litigation and claims. Okay, there are many more, but you can write this and gain marks, so please copy. Then we move to the last part of this question.
Last part, 5 marks, which ends this past paper question. It is now 20th August and Finance Director has just informed the audit team that the Everest Bank will not make a decision on the overdraft facility until the audit report is signed. The draft financial statement includes some going concern disclosures. Our audit team still has to assess the adequacy of these disclosures. The audit partner is satisfied that the use of going concern basis is appropriate. Discuss the issue, describe the impact on auditor's report of adequate and inadequate going concern disclosure. We have studied this multiple times. It is now 20th August. I solved 3 past papers in the classes regarding this, and many more past papers are to come in this last folder on LMS. It is now 20th August. Finance Director has just informed the audit team that Everest Bank will not make a decision on renewal of overdraft facility until the audit report is signed. Draft statements include going concern disclosures. However, the audit team still has to assess the adequacy of these disclosures. Audit partner is satisfied that use of going concern is appropriate. That means audit partner is satisfied that company is going concern. Discuss the issue, describe the impact on audit report of adequate and inadequate disclosure. Discuss the issue, describe the impact on audit report. Now, impact on audit report on going concern has 3 cases. Number 1, if auditor believes company is going concern, okay, going concern basis is inappropriate, auditor believes that company is not going concern or has significant doubts on going concern. And third, management is unwilling to extend or make its assessment, okay. And on 3 cases, I've taught you the impact on audit report. Here, discuss the issue, describe impact on audit report of adequate and inadequate disclosure, okay. Now, if you want to describe the impact on audit report, there are 3 cases in going concern. Number 1, company is going concern. Auditor believes company is going concern. Going concern is not valid. Auditor has serious doubts and management is unwilling to extend its assessment. To write the impact on audit report, you must first describe what is the case here. It's clearly mentioned audit partner is satisfied that the use of going concern is appropriate. That means auditor believes company is going concern. Okay. Case 1. Auditor is not believing that company is not a going concern. Case 2. Management is not willing to extend its assessment. Case 3. It's case 1. Right? If auditor believes company is going concern, in this case, management is required to disclose this in financial statements. Now, case 2, if auditor believes company is not going concern, that FS must be prepared on breakup basis. Okay. If management is unwilling to extend its assessment, then there is limitation to obtain side. So, before writing the impact on audit report and going concern, you must need to decide what is the case. Case is 1, auditor is satisfied that company is indeed going concern. So, since audit believes company is going concern, treatment is management is required to disclose in financial statement. If management adequately disclose it in financial statement, then an unmodified opinion will be given, but a material uncertainty going concern will be mentioned. In going concern paragraph in audit report. However, if management do not adequately disclose it in financial statements, then audit opinion will be modified. If material but not pervasive, then qualified opinion will be issued. A basis for qualified opinion para will be added that explains reason for qualified opinion. Opinion para state except for. So this is not required, but except for this, everything else is okay. Okay. So this is exactly what has been taught to you in the classes, that when it asks for impact on audit report in going concern, to answer, I must firstly know what exactly is the case. If auditor believes company is going concern, case 1. If auditor believes company is not a going concern, case 2. Serious doubts, management unwilling to extend assessment, case 3. Since it's clear that audit partner is satisfied that goes of going concern basis is appropriate, he believes company is going concern. In that case, management is required to disclose. If adequately disclosed, unmodified material instituted with respect to going concern para. If it's inadequate, then opinion will be modified, except for qualified opinion will be given, material but not pervasive. Basis for qualified panel will be added. Okay. So I hope this whole past paper question was covered in detail and everything was related to the classes. Okay. And that would be it for this past paper. You can